The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 16th terrific Thursday edition. I'll have to say cool, terrific Thursday edition of today's opening bell on the Trader's Edge. At least cool for us folks down here in Florida. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call our life becomes what we think. Thought, Thought and the act of thinking is one of the greatest powers you and I possess. And like most powers, it can be used positively and, of course, negatively. So the question is, are you more positive or negative when it comes to your thinking? Something to think about. After all, our life becomes what we think. Life is a mirror, and life will reflect back to us that which we think. My favorite expression about mirrors is this: turn your mirrors into windows. It means look in the mirror. See the person you want to become. I say become because you are always improving. And then take massive action. And then, of course, jump through that mirror. Hence, turn your mirrors into windows. We can and we do control our thoughts. Thomas Edison, he once was quoted as saying, "It's remarkable to what lengths people will go to avoid thought." Thomas Edison, he's touched each of our lives. When it comes to thought, each of us typically uses an expression when something goes off in our head or when we solve a problem. That's right. We use it in the tiger's den all the time. It's that light bulb that goes off in our head. Edison had a ton of light bulbs go off in his head. In fact, he's the fourth most prolific inventor still with 1,093 U.S. patents. Did you know that Edison invented the stock ticker? We're here today. I get to do this show because of Thomas Edison. Of course, it's an electronic stock ticker. He founded GE. Most of you know that. Other fine companies. I think Edison thought positive thoughts. And each of us should also think positive thoughts because our life does become what we think. And I think you are simply amazing. So let's go have an amazing day and, of course, an amazing life. Let's go check out these amazing markets. Wait, my screen must be wrong. I see red. I see the Dow is down 31 points. It's trading at 16,377. S&P futures up 3.5 points. They're trading out at 1838. NASDAQ futures down 35.96 is what it's trading at. The U.S. dollar index, was up pretty big yesterday. Today down 22 cents. It's trading out at 80.91. That means the euro's on the move. The Great British Pound is flat right now. We'll take a look at the currency pairs. Goldilocks and silver starting to get a little juice. Got gold is up about $4. Of course, that is, like I say, a little bit of juice. It's trading out at $12.42. Silver is trading out at $20.16. Light sweet crude is down 10 cents. In fact, we're going to start off taking a look at light sweet crude, because it's really a follow-up to a call a couple days ago. So it's Thursday. So it was a follow-up to a call a couple days ago. Might have been Monday, Tuesday. I don't recall which day it was. Well, we probably go back to the chart and actually figure it out. But let's take a quick peek around the globe, see what we have going on out here right now. Over in Europe, the DAX is off 16 points. Not a big deal. The FTSE is flat. It's up 3. Over in Asia last night, the Nikkei was off 61. The Hang Seng was up 84. And again, the Shanghai, which I've been watching, looking for some additional bullish confirmation. We did not get that last night. Another flat trading session inside of the Shanghai. It was up a total of 36 cents out there. So let's go take a look. If you're watching us on TigerTV, what you see on my screen here is a 30-minute chart. It's a continuous contract for light sweet crude. The caller was looking to go short light sweet crude. And I suggested that, you know what? I said, let's go down into an intraday chart and let's take a look for a pattern to complete out there before you would go ahead and consider taking a short position. And that's what we did. We looked at the daily chart. We'll do that here in a few moments. But we went to the 30-minute chart just to take a look at some patterns inside the 30-minute chart. What we saw inside the 30-minute chart was the potential for an A to B equals CD up. And what you're really looking for, some type of a Gartley sell signal. It's a great pattern, or just selling the D point of an A to B equals CD up. And in this case here, so the call must have come in, let's see, today's the 16th, so it must have come in around the 14th, because I haven't touched the chart other than just pull it up like this. So we already had the A to B equals CD form. That means we had to have the C point out here, which took place at 2:30 in the afternoon on January 13th. So the call had to come in, obviously, after that and in the morning. Now, what I said, and I'm sure you'd have to go back and replay the show, but I can tell you what I would have said. 93.62 would have been the first target for us to be paying attention to. And what I would have said is only if we see a bearish reversal signal. And what that also means is that you want to make sure that you understand what's going on. Just so, we use volume, or we can use volume as one of our tools. Remember, volume only represents 1/4, not necessarily 25% of the weighting of what you're going to make a decision on, but only represents one element, of which there are 4 primary elements of price movement out there. But one of those elements is just simply, if you didn't have volume on a stock chart, what is it that the candle could signal to you, that it could tell you? Look, as you are completing any pattern out there, the market's always communicating to us, bulls and bears. And when you come into a point, in this case here, 96.32 was the A to B equals CD, the exact A to B equals CD. And as you're coming into it with a wide-ranging bar, which it did at 10 o'clock yesterday morning, it had some accelerated volume coming in there. Now, it didn't hit the 93.63. Remember, we use these as guidelines, like Jack Sparrow in Pirates of the Caribbean. I don't think it was Jack Sparrow. I think it was the other guy. But we just use these as guidelines, not as exactness out here. So 93.63 was the number. It got up to 93.47. But you're coming into it with a wide-ranging bar. The very next bar, it just was kind of a little bit of it's really what's called a high wave candle. Now, high wave candle, as price is moving up or price is moving down, great candle. Don't mistake it for a doji. I mean, it's similar, but not really exactly the same. But they can both have similar meanings. From the standpoint of this, it tells you that, hey, maybe the market's losing its direction. Well, guess what? On that very next candle, didn't lose the direction out there. And you saw it's not a bearish reversal signal, that's for sure. So you can't jump in on your target saying, hey, my target's 93.63. And I know that this caller didn't do that, but I want to be able to, it's so easy to go back to, a call that came in, something that we took a look at, figure out what we can learn from either being right or wrong. Because we learn in both instances out here, and you can see no bearish reversal signal there. But what we did get was a signal that said, hey, you know what? I'm not sure what I'm going to do, but boy, on the next bar, that wide-ranging bar there, doesn't get any stronger really than that. The only way that bar itself, at 11 o'clock, this is on the 15th, so this is yesterday morning, the only way that bar could have gotten any stronger would have been for it to have been a bar where the open was the low and the close was the high. No wick, no shadow at all. That's the only way it possibly could have gotten any stronger. On a scale of 0 to 10, 1 to 10, or 10 being the strongest, that's a 10. It doesn't get any stronger. Well, like I said, maybe just a tad stronger, okay? But it really doesn't get any stronger than that. You certainly, if that is the way that a pattern is completed, you can't sell. Well, I suggest that you don't. You can do anything that you want, obviously. But I would suggest, no matter what system, no matter what tools, no matter what trading strategy, don't go shorting a candle like that. Wait until you get some kind of reversal signal. Now, if we take fast forward to where it is that we're at now, we can see price moves up, makes that little doji candle right here at about 1:30 in the afternoon, 13:30, little bearish engulfing candle. I do mean little because on a doji candle, basically the open and close is the same. And, of course, so to be a bearish engulfing, I mean, how much do you have to actually engulf? Because an engulfing candle is engulfing the prior session's body. If it's a flat open and close, there's nothing really to engulf there. So not exactly much of a bearish reversal signal out here. What we can also see is that price inside light sweet crude on a 30-minute basis was what? It was extremely overbought. If you're not watching us on Tiger TV, it's just utilizing that 14-period relative strength, relative weakness indicator out here, getting into the upper level extremes in the 83 level. So certainly the extremes, rubber band has to snap, and it's got to work that condition off. Now, in this case here, what you're really paying attention to is how does it work itself off? And I would not exactly say that the way that it worked itself off was really bearish. I mean, it just simply moved sideways to slightly lower, coming into that little sign of strength out here. Now, it was a sign of strength also from a volume standpoint inside of light sweet crude. Did 24,000 contracts during that 11 o'clock session out there. The follow-up session, the very next session, did about 8,800 contracts out here. So it's not exactly as if in all small-bodied candles as it was just simply retracing. If you're going to take a look at a retracement that was done as well, I would just simply, for whatever reason, come off about the 9:30 session all the way up to the high out here. And you can see only about a 0.382 retracement thus far, down to about the 93.91 level out here. So as we take a look at this, it's really, when I pull this chart, just happen to be going and updating some charts to make sure my tabs and everything here were looking okay. And so I thought, this would be a great example for us, just simply to come back, take a look at it, because each of you use different trading systems. It doesn't matter what you use out there. The candles are the candles. The bulls and bears are the bulls and the bears, and you want to wait until you get some kind of reversal signal inside of the market. Now let's just take a look at the longer-term chart out here. Let's go see what's going on inside of the daily chart. You always need to know what's going on here. And in this case here, as we take a look at real retracements, if we come off of the high, the potential of the C to D leg that we're in right now. So if you come off of the December 27th high down to the low that was put in, this is back here, it looks like on January 9th out at 91.24. What we'll see is the 0.382 retracement level, in essence, is where we're at, right around 94.87. Hey, if that's all that we're seeing in this bounce out here, and we don't have a reversal signal on a daily basis out here, boy, we've got some lower prices coming to us when it comes to light sweet crude. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market out here, you've got Chuck E. Cheese Entertainment, CEC. I believe a buyout going on out there, being acquired by Apollo Group. They closed at $48.43. Last trade here fired off at $54. I'm assuming the buyout somewhere right around $55 out there. Sarepta Therapeutics back on our screens here. SRPT closed at $19.98. Right now trading out at $23 and change out there. No news that I really see about the move behind it. Solar City, that's trading up this morning. It's closed at $68.50, trading at $71, and a little bit of change out there. Rio Tinto Mines, they close at $52.99. They're trading out at $55. New Skin Enterprises having another difficult morning here. They closed at $115. Holy cow, they're trading down at $89 out there. They had a tough day yesterday, I'm pretty sure, with volume out there. So the volume coming out of that balloon big time. Best Buy closed at $37.57. I saw a little bit of discussion. I didn't really get a chance to read it in the Tiger's Den. Unfortunately, I have a not unfortunately, but I've got a Windows laptop that really runs everything. So it's a great laptop because you have no idea how many applications I'm running while I'm actually doing this radio show. Well, I've got 2 different trading systems up, 1 data feed, my trading platform. All the interaction between TFNN and myself, Microsoft Word going, Excel. I've got Twitter up in case I want to send out an alert to my clients because there's a trade that we're taking a look at, but certain parameters need to be met, so that I can do it seamlessly during the show. And so it's a Windows-based machine. And I thought I had turned this off before, and apparently I didn't. I got to make sure I go back and check it out. And that's this. I get up this morning, and it takes me a few hours to get everything together here. So, I've got my timing down, and I get up, and the computer's frozen. Now I'm frozen too. It's a little bit cold, a little bit chilly down here in Florida, in the 40s and 50s. So for me, below 70 is cold. And I get up and the computer's frozen. I'm like, oh, man, that's not a good sign. And they can't get anything. Yesterday while I was on the air, my mouse, the batteries went out. But that's easy enough because I overcame that pretty quickly. But in any event here, so it was one of these Windows updates that was going on. It took me a full hour just to be able to get the computer back up. And I needed that hour really, to update what I didn't get finished on the newsletter, to be able to update my clients. So the newsletter actually got out a little bit later than normal. Normally I get it out by 8 o'clock. That way it gives folks plenty of time because it's very detailed, very thorough analysis of all the different markets out there. And, so many different client subscribers use it for different purposes. So I like to be able to get that out. They rely on it being out at around 8 o'clock, not 8:30-ish or what have you. And so, in any event, I don't even know how I got onto this subject here, but anyway, so look, we're back up and running. So that's the good news out here. And I don't even remember how I got on that subject, so it doesn't matter. Now let's go take a look here at light sweet crude. Let's go back to the 120-minute chart here for light sweet crude as we speak, and that's what I've got up on my screen. If you're watching, this is the Rhodes Momentum Indicator system strategy that I have built out here, and it really helps to identify the momentum of any market. Now, in this case here, we're taking a look at the 120-minute chart for light sweet crude. What we can see, it's got one of my favorite patterns out here as it was forming a low back here at about 4 o'clock in the afternoon. The day looks like about January the 9th out there. It was that little price relative strength divergent pattern out there. So that's a beauty. You had a nice little bullish candle that took place here, bullish engulfing, bull sash candle that took place as we were dealing with that 4 p.m. So that's what you like to see. Price came back and tested that support level. That's what's nice about these different bullish or bearish candles out here. You see these little red boxes or green boxes. They help us to identify who's in control of the markets, whether it's buyers or sellers in control of the market here. You can see as light sweet crude here was bouncing, what we have seen here, other than this session that took place at 4 a.m. this morning here, and that really was a buying. That's that signal there, that first little green uptrend, and you really can't see it that clearly, I think, probably on your screens, but it says a letter U for uptrend out here. And what this has, and we got a nice little bullish signal out there. So right now, we have not gotten on the 120-minute chart. We haven't gotten any type of reversal signal or pattern that you would want to, that in my opinion, that you would want to trade. We see here that really the buyers have, we've seen some resistance. It's the black line going across my screen here. Instead of using a 50-day exponential moving average, it's actually a 55-day. Why 55? Because it happens to be one of the numbers in the Fibonacci summation index out there. So why not use it? Heck, we use 1.618, 1.272, 0.618, 0.786. Why don't we use the numbers that actually make up those levels out there? And that's what I'm doing. 55-day exponential moving average. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down about 40 points, trading out at 16,442. S&P off 3 points, trading at 1845. Composite down 4 points, trading at 4211. Russell 2000 slow to get out of the gate, off 87 cents, trading out at 1170. Apple down $1.50. Microsoft up 20 cents. Google up $1.45, leading the charge. The upside, other than Chuck E. Cheese out there. Paying, it's up $6. Of course, that's on the buyout. You got Solar City, that's up $4. Sarepta Therapeutics up $3. BHP Billiton up $2. Baidu up about $1.50. To the downside, Nu Skin, Best Buy, Herbalife, Amazon, Netflix, iGate Corp out there, all trading down. We'll take a look at each or some of these stocks out here. Let's go take a look at a couple of these things here. Let's take a look at one that is popping. Let's go take a look at Sarepta Therapeutics out here. SRPT is the ticker symbol. Gapping up this morning nicely, too. There must be some kind of news behind it. Let's pull this back here. Let me get rid of the A to B equals CD pattern out here. So Sarepta Therapeutics, boy, talk about, let me pull this stock back. Talk about a stock out here and a reason to take profits when you get profits, and at least make sure that you're using stops and so forth. Sarepta Therapeutics, based on some news, we've seen some pretty wild swings in different pharma companies out here. And if you take a look at Sarepta Therapeutics, I mean, gapping up was a huge. First, you had a couple of really nice signs of strength. Let me just pull this back over here, and that way it makes it a little bit easier to watch the chart out here. First sign of strength inside Sarepta was off the lows here at $3 and change. July 23rd, moves up right here on July 24th with 16 million shares. Big gap up, $3 doubles overnight from 3-something to 852. So more than doubles. Big volume behind the move. Never comes back to test that out. Just simply consolidates sideways for about, a dozen trading sessions or so. But really, all of a sudden, truly takes off on the trading session here of October the 3rd. This goes then from $17. So after it doubled again, $17, and it closed at that very next session out at $45. Now, this thing then, it did fall out of bed. So here is if we can, now I got to pull this stock chart back here. Let me get rid of a few things on the actual chart itself. Let me just delete it all. It makes it a little bit easier. Now this thing, just as it gapped up and had some nice strength in it, it also gapped down hugely. And that gap down, when I say hugely, was right here on the trading session of November 12th, 38 million shares. And so now it's clawing its way back. Now, where inside this gap it could start to run into some real trouble because, you've got some big volume. There's still folks out here. No, there's no question. I would think there's still folks and investors out here in the $45 range. They're seeing at $22 or what have you. that would maybe just like their money back on syrup. They didn't enjoy that ride, and they're like, how do I get off here? That's why we take a look at those supply lines out there. They're just natural places. You got to think of the stock market, and when you take a look at a stock chart, and you see those volume bars out there, you got to put yourself in because the chart is nothing more than all kinds of emotion that you have out here. And so when you have a downdraft like this, what you really like to see is some signs of strength if this thing is truly going to go ahead and move higher. Now, this did have a nice sign of strength right here. This is on the last sign of strength inside. This was on December the 12th out there with 7.3 million shares. Unfortunately, he also had a little sign of weakness with 4.5 million shares on January 6th. So, this stock here, hard for me to tell you really how to trade this one, or whether you even should consider trading this stock out here, because it could be a huge. It's got a big supply line that it is going to have to work its way through. But we'll watch it from time to time. That is on Sarepta Therapeutics. Let's take a look here at let's go back and take a look at Nu Skin. I think I still have that chart on my screen here, from yesterday. So this thing here yesterday down with big volume. And what we were pointing out was that it was trading right into the trading session that had its last sign of strength, which was on October 22nd out here. That was with 5.7 million shares. We said the dangerous thing was it was coming into that level with big volume, and it was 9.9 million shares. And that was really, as we took a look at this chart, my recollection is the first sign of institutional selling that we saw inside of this equity here, other than going back into 2012, August of 2012. Now, that was the real first sign of institutional selling. And what we said was that once you see the first sign, that there's going to be more that follow. And in this case here, boy, we've seen that take place today. This thing is down with another 3 million shares. We've only been trading here for 9 minutes, and it's coming back to this original breakout area. In fact, it's almost hit the top of it, which is the trading session from July 10th. That doesn't mean that that's going to stop the ascent, or the fall, I should say, out here. That's just your target area for where this thing ought to at least trade back down into is July 9th, which is right around the $64 area. So it's at 87 right now. It's got plenty of room and certainly momentum and energy in order for this thing to move lower and to move significantly lower. So that is on Nu Skin out there, and that's why you got to be careful. IBD is a great newspaper, great tool to be able to take a look at different momentum stocks, but don't go overweight the IBD 50 stocks out there, because you go back and you can go back and get all the papers out there. You go watch the personality of those stocks when they crater. They don't just like a little bit of volume off of the top. They crater. They absolutely, one by one, they crater. So, that's what you're going to see on big momentum plays like that. And that's where you really absolutely must be paying attention to where those volume bars are, because when things fall out of bed, those are going to be your potential first areas of support inside an equity. And that way it makes it easy to continue to do the reward to risk decisions that you always have to make when you are in any kind of a stock out there. And that's why you always use stops. And my recommendation is use a market stop. That means if the stock gaps down below, just take your loss at that stage, whatever the market is. Take your stop, go back in, take a look at the trade. If you want to get back in, go ahead and get back in, but just simply take your medicine. Because if you don't take your medicine, what happens is you start saying to yourself, like, imagine the people yesterday, because here's what they were doing. Here's exactly what they were doing. You know this, and I know this. You had people who maybe didn't have stops in place, or maybe they had a limit stop in place here. It moves down yesterday, and they're like, oh, maybe this thing is going to bounce up. And it closed here at 115. Maybe this thing is going to bounce, right? And now you don't even know because your stop got jumped, because it was a limit, because you didn't take yourself out of the market at that stage. Now you're going through a debate in your head, which is really tough to solve. Solving problems in your head. Don't solve problems in your head. Solve them on paper. It's so much easier. And in this case here, that's why when I say solve a problem on paper when it comes to trading, that's why your stops are not just on paper, they're on your trading platform. The stops are in there. You don't have to worry. And if you make, in my opinion, again, you make those stops a market stop when your stop gets jumped, so be it. You know, if you use proper position sizing out there, you should be in pretty decent shape. And so in this case here, you know, those folks that were questioning, you know, should I get out, you know, or what have you, now take a look at it today. You know, closed out yesterday, what, 115? It's trading at $86 right now. You think they're going through that same decision? Now, some of that remorse or what have you, there's no reason to have to do that. So, anyways, words of advice from Stevie Son out there. In any event, let's go take a look at Best Buy. That's getting hammered here this morning. Of course, you could see that coming. You know, the place to be. Like as you drive around, as I drive around, we take a look at retail stores. You know, how many of you pass a old Circuit City store that's still empty? They're out there all over the place across the country out here, you know. So when it comes to electronics, when it comes to, you know, more brick and mortar type stores out here, folks, you know, who couldn't see this coming? Now, in the case of Best Buy, let me just go ahead and the mere fact that it gapped down this morning, is there anything on this chart that would have told us that was that you could almost expect that? No, I hadn't pulled up. I haven't looked at Best Buy here in forever. Of course, there was something that told us to expect a gap down like it is that we're seeing here, and that was the institutional selling that came across the ticker on November 19th. This thing goes up, makes a new high, had a nice sign of strength. If you go back to the August 20th time frame, gapped up. Did it with some nice volume. Now, take a look at the island reversal that this has formed out here, folks. Did you catch that island reversal? Probably one of the larger island reversals that you'll almost ever see, I suppose. But so let's take a look at Best Buy. You want to talk about maybe this has curtains out here? Well, first, let's take a look at Best Buy. So the last time we saw a sign of strength was back here on August 20th, because this is where the island forms. So this is like a chain of islands. This is not just an island reversal. This is like a chain of islands out here. Because if we take a look at it, it gaps up on August 20th, the low of which is $33 and a penny. Does with nice volume, 31 million shares out here. No more real signs of strength of any kind of significance. But boy, you did see institutional selling. You saw volume off the top, institutional selling. That took place on November 19th. That's when it gapped down with 33 million shares out there. So when you see that institutional selling, what's your modus operandi? Yeah, maybe time for me to get out of the trade, really protect my profits. Now take a look at the island that this formed out here. I mean, a true chain of islands out here. Let's use this tool here. It becomes easy to draw. I think it should become easy to draw. And here is the entire island inside of Best Buy. Look at that. We're talking about from the breakout session that it had on August the 20th. Now, it's probably at all-time high. No, it's not at all-time highs. Not at all-time. That doesn't really matter whether it's at all-time highs or not. But take a look at the island. So everybody in this equity who didn't sell between the time period of August 20th and today are stranded on an island, a huge chain of islands out there inside of Best Buy, because what did it do today? It gapped down below the gap that never got filled on August 20th. And what it's doing here today, you've got volume to the downside. Already 24 million shares. That 24 million shares probably headed to where? Well, certainly headed to this high volume bar here on April the 4th, which is between 2171 and 2550 out there. That's got 55 million shares, but it looks like today it's coming back in that area with even more volume than that. So this thing here is looking really bad. I mean, that is a island reversal, folks. That's a biggie out there, and that is on Best Buy. Intercept Pharmaceuticals. Let's go check that one out, because that one has been a flyer to the upside and now maybe a flyer to the downside. I don't think I have that chart anywhere. So ICPT is the ticker symbol. So let's go see what it is doing. Now, this thing here could be forming a huge island. Let me refresh my screen out here. Yeah. So this has danger, right? Take a look at this island. Now, this thing flew up all the way to a price high of 380, if my bars are correct out here. And right now it's trading at 272 out there. And I'm not suggesting that this is going to turn into an island, but it most certainly could. Now, if it turns into an island, that says that the price comes all the way back down to about $71 out there, and that will have stranded a bunch of unhappy campers, and that is on Intercept Pharmaceuticals out here. Let's take a look at some additional stocks that are moving to the upside and downside. You got BlackRock, BLK, That is moving to the upside here this morning. In fact, that is the leader in the clubhouse. That is up about $8 and change. BLK, I believe they were out with earnings before the bell. Boy, I got a lot of things on this chart. I don't know how some of these things even got on here. Let me control all. Let's delete. Oh, I remember I did this. Did some analysis for someone. Oh, let's delete it all. There we go. So let's take a look at BlackRock out here. BlackRock gapping up, trying to take out a swing point from December 26th. That held only 340,000 shares, so it's having no problem from a volume standpoint being able to do that today here, up with 182,000 shares. I believe this is at all-time highs. Yeah, it most certainly is at all-time highs. So trying to take out a B point here. If you do get a close inside BlackRock above 323, that would set up an A to B, at least a small A to B equals CD to the upside. That would say BlackRock would be looking at a price projection here. If it can close above that B point, because it's going to have the volume, so that's not the issue. Now it's a question of price. 323, even Steven, one of Basil's round number highs out there. So if it can close above that 323, it's at 322.91. Says price probably ought to move up to about the 337 to 346 level. BLK, BlackRock Inc. is the ticker symbol out there. Let's go check out the currency pairs. Had a question, go take a look at the euro, Japanese yen. So let's go take a look at all of the currency pairs out here. Let's see what we've got on the screen. What pops up first? Great British Pound, U.S. dollar. You can see that significant resistance area here. Here's the weekly chart for the Great British Pound, U.S. dollar. It's been trying to break out of a sideways consolidation that in essence has been in place since the early part of 2010. So this thing has gone on for about 4 years. It is struggling. Every time it tries to get over that consolidation level, just simply runs into significant resistance. It's important for us to pay attention to that, because if it ever does clear that level, that says that the Great British Pound U.S. dollar ought to move up to about the $1.81-ish area. So that would be a nice long play inside. But it's got its work cut out for it. It is struggling in order to be able to get up above those levels out there. Again, the consolidation top is somewhere right around the 1.645-ish area. You're trading right now at 163.59. Right now, the Dow is off 60 points. S&P is down 5. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 40 points, 41 points right now. S&P is off 3 points, and you want to, quite a wild week out here. We've had a little bit for the Bulls, a little bit for the Bears. Put things in perspective, when the futures opened up Sunday evening, the opening price was $18.38.50. Right now, the ES Mini is trading out at $18.39.75. So we've had a lot of fireworks here. We've had price movement, certainly intra-week price movement out here, but we're basically where we opened on Sunday evening out there at the moment. So let's go back to the currencies out here. We only took a look at the Great British Pound, U.S. dollar. The question was really about the euro, Japanese yen. So let's go take a look at the euro, Japanese yen. It really has not done much here this week either. So, just to kind of, and I didn't intentionally do this correlation. It just happened to be that I've got the weekly chart for the euro, Japanese yen. And as I mentioned, to me, this is the best currency pair to track what's going on inside of the U.S. stock market out here. And if we take a look at when this currency pair opened on Sunday evening, you can see that we are basically trading just a few pips below where it actually opened up as well. So that is on the euro, Japanese yen. So not a ton of movement, not a ton of information that the euro, Japanese yen here. Certainly not telling us any kind of bullish breakout to the upside as we speak here right now. So that's what's going on inside that currency pair. If we take a look at the Queen, the euro, U.S. dollar index. Let's go see what we have going on here. Let's take a look at a daily chart. Well, this is the daily chart. So on the daily chart, the downside potential, I would have to say, is the bottom of this little rising price channel. That's the black diagonal line that you see going on my screen here right now. What we can see is that the euro, Japanese yen just traveling with inside of this inward shaping cone out here, and it's been traveling. That's the top of the cone is represented by the descending price channel line coming back to the 2008 time frame, and then we've seen the nice little rising price channel that took place back in July, or began back in July of 2012. So I don't see other than trading the euro on maybe 15-minute chart patterns out here, I think you're better off just being patient to see which way the euro is going to break through either that rising price channel and if it does, breaks to the downside, then you've got some action to take a look at both sides. So that's the euro. Let's take a look at the U.S. dollar, Japanese yen out here. Let's go take a look at that, see what that currency pair is doing. Give me a moment to find it, though. U.S. dollar, Japanese yen. So as you know, the monthly chart is extremely bullish because it's got a breakout of a price channel back from 1998 out there. So that is broken. I say you would be best to be looking for long trades inside of the U.S. dollar, Japanese yen. But let's take a look at a daily chart. Let me see if I have a daily chart before I out here on my screen. I don't, so let's come back here and let's put this onto the daily chart. I shouldn't lose all that data, but anything can happen out here. On the daily chart for the U.S. dollar, Japanese yen, really all did so far just worked off a overbought condition out here, and really just been traveling sideways. You had this nice wide-ranging bar on December 18th. Of course, so did our markets here, courtesy of the Federal Reserve. Uncle Ben Bernanke out there, that was part of his going-away party. So the U.S. dollar, Japanese yen, really just kind of traveling sideways on the daily bars that we're taking a look at. Nothing overly bullish. Looks like a small little A to B equals CD down might have formed out here. So again, it still looks rather bullish to me. That is inside this currency pair. So, folks, it is a terrific Thursday if you're off to start your day. Thanks so much for beginning it. Well, not beginning it, but joining us here at TFNN. We really appreciate that. Stay tuned. The Money Masters Show is up next. I'll watch for today here. If the market really were to sell off and you were to see more than 1,472 net declining issues inside the New York Stock Exchange, the bears will have exerted their effort in this market that virtually has gone nowhere since Sunday evening. Folks, have a great Thursday. Look forward to seeing you soon. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.